Good afternoon, everybody. Sorry, I had the camera on and the sound not on. It's okay to go. I'm okay to go. All right, let me know you hear us all right. See us all right. Helps when I turn the sound on. That announcement is out. What's the word out there? Oh my God, they did what we expected, and the market did absolutely nothing. We're waiting for, of course, Jerome Powell hits the main stage in 26 minutes. What you should expect is absolutely nothing. What is the man going to say? Before I actually get deep into this, this is I think you guys actually really like what we're going to do today. We're going to trade. I'm going to let you know right off the bat. We're going to trade today. There's days I wake up and I'm like, I want to trade today. This is definitely one of them. So I'm going to fire off a couple of positions. Hope that that's okay with everybody. And what I'm going to discuss today, in my opinion, is far more important than the Fed announcement, and that's predominantly because, well, what's the man going to say? I think that the marketplace, and I want to be clear about this as we get into it, I think the marketplace is actually using this Fed announcement as a little bit of an excuse to fire some order flow off. It's one of the reasons we've seen volatility, and I'm going to start with this a little bit. So, welcome everybody. My name is Don Kaufman. Let's get into it. I'll give you an official start in a moment here with the PowerPoint, but take a look. There's a little bit of a bid back to volatility. That means volatility has kind of been lifting in the backdrop. The last four trading sessions, you've got a bid under VVIX, which is VVIX is important. It's the volatility of VIX, kind of tells us who's hedging. Okay, get your hedges on. If they're getting, if professional trade is hedging, it's often seen here. So we're going for it right now a little bit. We're going to do some trades, but again, I just wanted to mention a bit about the Fed announcement thus far in terms of price action. We're not really seeing anything. You can open up this and it'll talk about like, oh my gosh, they cut rates. Oh my gosh. Like, of course, everybody knew that they were going to cut rates. There's no surprise there. What Jerome Powell is going to say, let me give you the whole news conference. Okay. We cut rates. There's uncertainty due to the government shutdown. Okay, so we cut rates. That's number one. Uncertainty given the government shutdown. Number three is we ain't got no data. You like that one? CPI is completely depleted. Nobody gave a damn about the CPI anyway. And then here's the best part of it. The fifth and final factor is going to be that they're going to stop, okay, quantitative tightening, which then implies quantitative easing. QE, okay, I don't know about no QT, so there's not going to be quantitative tightening. There's going to be quantitative easing, and then they're going to take questions. That is your Fed announcement, and that is why I wanted to cover a little bit about how to trade well, exactly what we're going to do over here, trade around the calendar, but how to trade 40 trading days that actually matter. I'm going to break down why I'm saying 40 trading days in incredible depth today. There are 40 days that matter, and in theory, you could skip the other 212. So welcome everybody. Again, my name is Don Kaufman. Quick risk disclosure in here, okay? By the way, if you ever need to get a hold of me after today, just go to support@theotrade.com, put Don Kaufman in the subject matter. Speaking of Don Kaufman, this is me. I grew up in this business. I often say, like, people always have this like long, drawn out story of how they got involved in kind of the trading business. I grew up around it. I have been trading even from like high school years. I was screwing around. I had no idea what I was doing. 3 weeks out of college, I started trading in Chicago. I joined Thinkorswim a short time after that. I just knew Tom Sosnoff from the floor, and he approached me one day and heading the escalator up out of the Chicago Board Options Exchange, and I went to work for Tom. I ran a division of Thinkorswim for the better part of about 15 years when we were TD Ameritrade. That was wild. We went from 13 people in my time at Thinkorswim We went from 13 people sitting around a desk. Literally, we had like a desk that could fit, 15, 20 people, like a trade desk. Went from 13 people at my time to over 7,000. My organization alone at TD Ameritrade had 768 people in it. Um, a lot of what comes here at TheoTrade is from having watched your order flow, retail order flow for 15 years. So it's a little bit of background on me. I'll leave it at that. I'll give you like the nickel tour. Look, I want to be clear today. I do trade all year long. I trade every day. There's definitely days though I wake up and I'm like, I want to trade. It's been a little thin lately. Liquidity has sucked this last week. I mean, terrible liquidity this last week. In fact, it's some of the worst liquidity that I've ever seen. And if you are a trader already, you may know what liquidity, you're thinking volume. Volume has something to do with it, but liquidity means how many people are on a bid and how many people are on an offer. Okay. And the market over the last like 7 days is just horrifyingly low. Say the last 7 days, we had some volatility a couple weeks ago, snapped out of the volatility and started rallying a little bit, and the liquidity is kind of thinned out. The only thing that's seeing liquidity right now is the AI trade. There's not heavy bids or offers on any product. I noticed today, like Caterpillar shot up, okay, 12%. And this morning had only traded 1.2 million shares, up to about 5 million today. Okay. Even the option volume, it's nominal versus what we've seen in previous like earnings announcements. Really interesting stuff though going on in markets. Nevertheless, I do trade all year. Okay. But the big news today, okay, you don't have to. Before I go any further, look, I'm placing at least 3 trades live today. I actually have it scoped out that I'm probably going to do 4, maybe even 5. Okay. Microsoft, Meta, Google. Okay. They're on deck. They're on deck. What are they on deck for? Anybody know? You're going to see the entries, the strikes, all in real time. And again, I'm saying this for those of you that are a little bit newer. If you've been around TheoTrade, any period of time, when I trade live, I usually share everything. I'm going to share everything. I'm actually going to copy and paste my trades directly into the room. Um, so presentation will contain live trading. So warning, follow along. Feel free to follow along. I'll show you the setup, the exact orders. You can mirror the trades if you so choose. It's your account. And I'm going to tell you right now, and I'm going to tell you again, how you allocate to these trades, okay, is absolutely essential. And I'm saying that right freaking now before I even get into the trades. Over allocate, you're dead. Okay. Awkward pause. Celsius. That was my commercial for Celsius. It's your account, it's your decisions. But I'm going to beat the crap out of you guys about allocation in a little while. Today, big juicy question. What if you could capture a year's worth of trading gains in just 40 days? You have 40 days. What would you do with the other 212 trading days? Golf, reading, fishing, home projects, travel. By the way, I trade constantly, okay? But I'm here in the Pacific time zone right now, and markets close at 1 o'clock. It's quite nice. I get up at like 4:30 in the morning. Usually work till 1:30. Okay, go out, work around the house. Okay, I actually have a little fishing hole. Literally, I'm in Flagstaff, Arizona right now. Anybody here familiar with Flagstaff? Okay. Go Flagstaff. Nobody has any idea what Flagstaff. I'm in the mountains. It's freaking freezing out here too. It was 30, I think 2 degrees when I woke up this morning. It's warmed up a little bit. Where are we at right now? Okay. Yeah, it's 50 degrees. It's good stuff. So I love it up here. Absolutely love it up here. My family is down in Phoenix, but I'm up in Flag. I'm going to head back down today. But when I talk about like golf, reading, fishing, live in the golf course. I don't play golf. Okay, I ain't got time for that. But there's a fishing hole. I have not done it yet, but I want to. Home projects. That's actually why I'm up here in Flag. Travel. I only go now back and forth between here, okay, and Phoenix. I have a house also in the Virgin Islands. Right now is not a good time to be there. It's kind of storm season, so it is what it is. Simple math. Simple math. Okay. There's 252 trading days in a year. In this strategy, you use 40 of them. That leaves you 212 trading days to do absolutely nothing. I want to make that clear again. 252 trading days a year. Okay, with this strategy, we'll focus on 40 of them. 40 days in an entire year. You're not tied to screens, okay? Do with your time with whatever you want, with what you please. Okay. So that is 16% of the trading days of the year, 16% of the trading days of the year. So get your year done in a fraction of the times it takes others. So most, they tend to trade a lot of randomness throughout the year. Okay. I trade a scheduled 10-day window that repeats 4 times a year, and it's clockwork. The last 12 months with this strategy, okay, I actually took the last 12 months. By the way, I have every single trade, winners and losers, every single trade from this exact strategy over the last 12 months. Every $1,000 invested into the strategy turned out $1,827. I have the spreadsheet. And by the way, okay, people like, oh, I want to see winners and losers. It's in the spreadsheet. Okay. I actually went through a full analysis of the spreadsheet. Okay. Every $1,000 invested in the strategy turned into $1,827 winners and losers. What that means, it's an 82.7% on every $1,000 over the year. Okay. Obviously, you could make this 10,000. You can make it 100,000. Okay. Again, it includes losers. I did no cherry picking whatsoever. Okay. And the irony is that return, this return was without effective allocation. With effective allocation, it's going to be even higher than that. No cherry picking whatsoever. You feel the need for speed. The past year, colossal haul. Okay, there were 40 trades that returned triple digit winners. Okay, when this window pays out, pays out bigly and quickly. All right, how fast average hold? Okay, the average hold of this trade is 1.03 days. That's 24 hours and 36 minutes. That is the average holding time of the trade I'm about to show you. I actually love this because we took the spreadsheet and broke it down. And yeah, we used AI to do it. And it gave us every freaking detail of this. There's no if, and, or but about it anymore. We have it pegged. Okay. Of all of these trades, 1.03 days, 24 hours, and 36-minute hold time, no endless babysitting. Okay. There's 35 one-day trades. Okay. 2 that actually were closed in the same day, and 3 trades, okay, that were 2 days, short holds, clear exits. Okay. Short holds on every trade with clear exits. Ready? Let's pull profits, okay, from all sectors without ever needing to be a sector expert. If you look at tech, I did a trade in Amazon, 348%, Apple, 268%, Nvidia, 114%, Roku, 240%, Lilly, 389%. That was a big monkey. United Healthcare, 190%, Schwab, 123%, Hood, 150%, Caterpillar, okay, this is industrial sector, Cat, 195, Dell, okay, 168%. This is Best Buy. I almost said Bed Bath and Beyond, 141%. T-Moose, 315%. Okay, more sectors, more opportunity per window. This, okay, are what the trades break down to. These trades from the previous window. This is Google. Okay. By the way, I'm going to trade Google today. $51 invested. I got back 120. It's 135% return. Now, time out. This doesn't have to be $51 invested. Okay. I like to show the lowest common denominator in here for everybody to know that you could do this in a $2,000 account. For everybody to know, okay, you can do this in an IRA. So let's get crazy. You can do it in an IRA. You can do it any account size you want. That is not, okay, again, that is not going to be a critical juncture in there. So 3M, every $79 invested, I got back 165. It's 114% return. By the way, you'll notice this is a screenshot. That's a screenshot from Thinkorswim. Okay, that's Thinkorswim. And I actually come right over here, go to my account statement, dig in there and pull a screenshot. This one, this is actually from Tasty. Okay, so from Tasty Trade, I'll actually pull screenshots here as well. In fact, if you guys want, I can even do the trades today I set up a $2,000 account just to show you can do it in a $2,000 account. This is TSM, Taiwan Semiconductors, $54 invested, got back 133 to 146% return. Here's actually American Express, $62 invested, got back 135. It's 118% return. Tesla, $58 invested, got back 160. It's 176% return. Okay. This is Newmont. Okay. $58, got back 176, 203% return. Okay. Qualcomm, $66 invested. And again, this is all, okay, from the last, okay, period. $66 invested, got back 150, 127% return. Apple, there's your 260% return, 268% return inside of Apple. This is Zoom, 162% return. Okay. WeDay, 183% return. By the way, bear with me here. I was noticing my camera was on and off. It was weird. Okay. 183% return in WeDay. Dell, 167% return. Boom. Capital and time, define risk, short holds, scheduled entries. Okay, we could do this by the calendar. Less capital tied up, more life back. This is how you're going to compress a year's worth of returns, okay, into 40 days. Enjoy your trading more, okay? You're going to know when you're going to trade, you're going to know what you're going to trade, okay? And you're going to know exactly what you're not going to trade. There's not going to be ever fear of missing out of 212 trading days, okay? This only works in 40 days a year. Fits around your life. Batch, okay, effort for focused 10-day sprints, plan work, family, okay, around the window. Your calendar is your calendar. Stop fighting your trading, okay, the entire year. So it's a quick mindset shift, okay, that changed everything for me. Most traders, they sit there to try to win, okay, the year, one random day at a time. This strategy, okay, it's win by the windows. And that's exactly what I'm going to show. So let's start to bridge our way and get into it here a little bit. Today's plan, I'm going to show you my checklist for the window. So what do I mean by checklist? Okay, I'm actually going to go through details of how I get in and how I get out. You're going to see the live entries here in a moment with structure. Everything is going to be risk defined. Okay, everything is going to be risk defined. How I manage the trades, okay, and when I actually stand down on the trades. So your choice, okay, I'll keep trading, love the game, okay. You can run a 40-day year and reclaim a tremendous amount of time, okay. It's time to tell you everything. So what creates the 10-day profit windows, okay, and why, okay, are we in the midst of one right now? All right. So, and how I'm going to execute in the next basically 48 hours. So I've got today and I've got tomorrow. Obviously, it's earnings season. So it's earnings season. So if you break down what I'm going to do, okay, the market, the most predictable bursts of volatility, okay, are on the calendar every single quarter. And before I even get into it, and this is important, okay, we're going to talk about Microsoft. I'm going to use Microsoft initially. Okay, so I'm going to use Microsoft initially. Now, Microsoft has earnings today after the bell. We're going to trade the window. When I say the window only works on a Wednesday or Thursday, period. The strategy only works on a Wednesday or Thursday. So does Microsoft always fall on a Wednesday or Thursday? Absolutely not. Okay, but on a Wednesday or Thursday. And each earnings season, okay, each earnings season, like right now, we're in the thick of it. So you got a Thursday, okay, you got a Wednesday and a Thursday. It's 2 days, okay? How many, like, weeks does the earnings season even really go on? Okay, about 5. Okay, you got about 5 good weeks in earnings season. And it actually is pretty packed in there. It's all you have to trade, literally, okay? On a Wednesday or Thursday, take a shot at some trades. It's exactly what we're going to do. Okay. Do it again the next week. Do it again the next week. Before you know it, you're up to 40 trading days a year. And that is it. Couldn't be more simplistic than that. And I can actually map it out on a calendar here in a moment. Okay. So why I focus so much on earnings season? Because there's 10 trading days. Okay. 4 quarters, 40 days. Okay. That's it. It's all important 40 days. Okay. It's the same rhythm. And it's been the same rhythm. We've actually been trading this strategy for years here at Theo Trade. We prepare, okay, before the window even opens, we prepare and then we execute. So I'm prepared today to execute. Of course, okay, what most people think about earnings are a coin flip. I don't disagree with that, okay? The IV crush kills you. There's gap risk. It's untradeable. It's not repeatable. That's, okay, only what happens when you're winging it. Like people think they can actually predict things around earnings. What are you smoking? Earnings are coming tonight. Okay. Get in the game and understand. We're not going to wing anything. We're not going to try to predict anything. Okay. What we're going to do, okay, is rules, not guesses. Checklist, structure, entry, exit. Okay. Only inside the earnings window. All right. Built in risk control. Risk is going to be capped. You're going to be able to do trades today, 50 bucks, 60 bucks. I think the most expensive trade I might do today, okay, maybe I have one that costs 70 bucks. You okay with that? If you do one unit, okay, you're going to be in there for 70 bucks. And I think everybody can actually handle that. I mean, it costs that much for like a cup of Starbucks now. This is not going to be about, prayer in any way, shape, or form. Okay. Why you can trust it? The last 12 months. Again, okay, last 12 months, every $1,000 invested got back 1827. There are 40 triple digit winners. The way I have every one of those in a spreadsheet, average hold, okay, 1.03 days. All right, what you're going to see now, I'm going to apply the exact methodology live. Again, at least 3 trades are coming today. Google, Microsoft, Meta. I'm thinking Starbucks. I might look at even Chipotle. Let's get crazy, okay? The 800-pound burrito, which like split adjusted is a hell of a lot less now. But I'm going to show you entries, strikes, timings, okay, all in real time. Follow if you choose, okay? Mirror the trades. It's your account, your decisions. I'm going to show you the setups. I'm going to show you the orders. You decide, okay? Let's get into it. Let's roll. Let's execute earnings flips. Okay. So this is systemized, okay, earnings plays. And I'm going to show you the window right now. Okay. We are turning scheduled volatility. And I love to use that terminology, scheduled volatility. What the hell does that mean? Okay. What do you think it means? You know when earnings are coming out. Okay. You're going to look in a moment on Microsoft, and I'm going to use Microsoft as the marquee. There could not be a better day to do this. In fact, I did this today. Okay, of all days, you're like, there's a Fed announcement, man. Screw the Fed. Do you understand the market cap of Microsoft, Google, and Meta combined? It means far more than the Fed. The only thing bigger than that would be Nvidia. Okay, and Nvidia doesn't have the market cap of those 3 put together. So we are turning scheduled volatility, okay, into freedom. If you want to take off 212 trading days a year and just focus, okay, on earnings, I am telling you unequivocally, this is how to do it. Okay, ready? Let's actually get in here. Let's play some trades. Let's go right over to a trading application. I'm going to explain you exactly how to do this. Let's go to Microsoft. All right, everybody see the screen? We're good. Okay. By the way, I was looking this up earlier today. Nvidia. Did everybody see that Nvidia hit a $5 trillion market cap? It was all over the news today. It hit a $5 trillion market cap in Nvidia. If you take a look at Microsoft, okay, Microsoft, and we're going to go ahead and here, let me actually close. That's weird that it's looking that looks weird over there. So why is it doing that? There we go. Let's go over here to phase scores, open this up. I want to show you something interesting. Microsoft has a $4 trillion market cap. Okay. Nvidia has a $5 trillion market cap. How many, okay, sovereignties, countries in the world have $5 trillion GDP? How many countries in the entire world even have a $5 trillion GDP? I wanted to bring into scope how significant this really is. Okay. And the answer is there's 2. There's only 2 places in the whole world, okay? China and the United States that have over a $5 trillion GDP. So when you start looking at Microsoft and you start looking at NVIDIA, stop thinking about like market cap and start thinking GDP. That's how insane we've really become, okay? And yet you wonder why I'm not talking about the Fed, okay? I'm not talking about the Fed because Microsoft, okay, tonight has what? As I said a moment ago, Microsoft, okay, has $4 trillion in market cap. Let's throw some Google in here. Google, okay, is 3.3 trillion. We're already up to over $7 trillion in market cap. Let's throw Meta in there. It's almost a $2 trillion market cap. Where are we at? Okay, 9 trillion, give or take a few hundred billion. $9 trillion of market cap is going through earnings. And that is more, okay, than the GDP. Again, you're measuring this on a magnitude that is it's incomprehensible. And that's what's amazing about it. And that's why I wanted to say, if your focus right now is on the Fed, okay, you tend to be missing the boat a little bit over here. All right. So by the way, I know GDP and market cap is it's quite a different unit of measure, but it's the only way you can measure $5 trillion and $4 trillion. There's nothing else comparable other than GDP. Okay. It is wild, absolutely wild. So by the way, if your screen looks a little fuzzy, refresh, change your resolution. Microsoft. We got earnings tonight. Okay. We got earnings tonight in Microsoft. We want to trade earnings. Okay. We're going to do an earnings trade in Microsoft. I'm going to take you through each one of these earnings trades. The first question I have for you, okay, what do you want to do in Microsoft? Let me ask you, you want to be bullish, you want to be bearish? Okay. You're looking at the chart. You tell me, be bullish or bearish. Now I have multiple chat rooms going right now, and I'm actually going to get a temperature of this. Okay. Do you want to be bullish or bearish in here? Okay. You got to actually put it, you can't just put in a B because that could mean bullish or bearish. Okay. What are you new? All right. I'm kind of surprised right now. The Bulls and the Bears, holy crap. It's like almost dead even. There's a lot more bears than I would have thought. Okay. A lot more bears than I would have thought inside of Microsoft. Okay. Look, we're going to get 3 or 4 trades on. So if this is the one we're going to be a bear on, okay, let's bear it up, baby. Oh, there's a lot of bears in here. Okay. At first it was pretty even, and now, okay, and then the bears come out. All right. Are you bearish because you switch from Windows? Okay. Okay. For Linux, Linux. You're a geek if you're running Linux. I'm just going to throw that out there right now. Is that insulting to some of you? Because it was totally meant to be. When we were building Thinkorswim, there was always people calling. They're like, "Can you run that on Linux?" We're like, "Yes," and you can come out of the basement sometime this century. Clearly, I've had way too much caffeine. Um, this is uh, this is awesome. By the way, the risk in here, it's not going to matter whether you're bullish or bearish. The risk is going to basically be the same. So let's go into Microsoft. Let's talk a little bit about how to trade its earnings. Okay, I'm actually going to do what we term, okay, an earnings flip. And the reason I actually term it, okay, the flip, and I say earnings flips, like the reason we term it the flip is because literally when I first started trading this, okay, I have looked at everything involving earnings. And I want to be very, very clear about this, okay? Earnings, when it comes to trade abilities, meaning that when it comes to understanding trade, earnings, okay, are basically the most well-tracked aspect in the entire market. Like earnings are looked at more than anything. Does that everybody kind of agree with that? Like you can look at like markets and people can talk about the S&Ps, but earnings are the most heavily studied area of markets, especially around what we term order flow. The term order flow, before I can build the trade, order flow and just the terminology is essential. Order flow is basically what kind of crap, the trades that are coming in, like what's coming in, whether it's stocks, okay, whether it's the options marketplace. So show me options. There's 373,000 contracts trading in here today. That's only 1.6 times the norm versus the previous 5 days. Okay. This is called a sizzle index. Sizzle index over here. It's today's option volume versus the previous 5 days. Okay. There's nowhere on Thinkorswim that it says that. How can you know it? I wrote the requirement for that. The sizzle index is, part of my baby over here. A huge amount of the option statistics, okay, I built along with a gentleman by the name of Chesley Spencer. Chesley and I actually put this together, but the sizzle index, okay, it's today's option volume versus the previous 5 days. So at 1.6, it's doing about, again, normal would be 1. That's the same volume as yesterday. This is doing about 66% more volume than it was the previous day. Good, close it up. There's plenty of order flow in there. Next thing, open the shortest duration options possible. Open the shortest duration options possible. What do we got? OC31. OC31s, highlight them. Okay, great. How many days are left? 2. Excellent. Beautiful. Okay. I also want you to have open at this point. I don't want to see delta and gamma and any of that crap. Get all that crap off your screen. Okay. And if you're over on Tasty, great. Okay. I trade Tasty just as often as I do on Thinkorswim. In fact, I think I actually trade more on Tasty now. Same thing. OC31. Let's get crazy. Let's get crazy. Okay. The next thing we're going to do, we're going to open up, as I said, volume and open interest. Make sure your volume and open interest. Okay. People, is their volume, is their open interest? Are we good? Okay. Doesn't matter. Who cares? Powell's speaking. All right. Oh my gosh, he said something. I gave you the 5 things he's going to say. Okay. Goes, I don't know crap anymore. There you go. I fit all 5 things in there. Okay. I don't know crap anymore. They don't even know anything. Okay. Like Powell is riding blind. Okay. Even probably more so than you or I. At least we're looking at screens all day. What is he doing? Okay. He's actually giving talks for $250,000 an hour. Now, you got volume and you got your open interest. You just got to make sure that there's liquidity in here. All right. So we got through that. Why do I want to make sure liquidity? Because on the upper right-hand corner of your screen, you ready? Okay. Upper right-hand corner of your screen, that number is absolutely essential. People, that, okay. He said something, okay. Microsoft just dropped $1 in like 1 second. He said it, okay. He said something. You see, this thing is flying around. This is awesome. This is, by the way, for trading earnings, it couldn't be more fun because we're going to be nice, defined risk, okay, packed in a, a little corner over here, right over here, okay. That number is essential. I want to make it nice and big and known. It's about $25, okay, and 76 cents, okay. What is that number? We're going to label that the EM. Okay, what's EM? It's expected move. It says plus or minus $25.76. Time out. That's one of the most essential things to know around earnings announcements. I don't give a crap what's going on in the market. Sometimes the market goes higher and sometimes it goes lower. Okay, but when it comes to earnings, okay, earnings are all about flow. It's all about order flow. And what you have here, and I'm going to explain this $25, what you have here, look at the volume that's going through right now. Okay. See all of this volume in here? Forget even the open interest, all of this lovely volume. Okay. What this volume is doing is trading, obviously, these options. What this volume is doing is trading these options. There are billions of dollars trading these options right now, billions with a B. And what the billions of dollars do, okay, in trading these options is that's really what sets price. Okay. That's really what determines price. But this number over here, okay, even though it's moving minimally, what that number is, let's put it up again, right? So you got $25, okay, and 76 cents. What is that number? You go, it's the expected move. Yeah, but what the hell is the expected move? Huh? Okay. Anybody? Anybody. Okay. What is the expected move in the end? Let's see if anybody gets this. Okay. Come on. This is an interactive session here today. Okay. Let's get crazy. Let's get into it. Let's make sure that people really understand this crap. It's one thing to talk about it. It's another, though, for people just to sit there and be like, okay. Okay. It's not the market maker move. I mean, yeah, it is a version of a market maker move. Okay. I like it. People like it's one standard deviation move. Okay. In the end, though, what really is it? Okay. I'll tell you exactly what it is. It's an average of all the options that are being traded. That's really what it is. It's an averaging model. That's it. Okay. By the way, one of my other claims to fame in here is heavily, heavily worked on expected move. Okay. And again, Microsoft's moving a little bit, but nothing crazy. Like, I think it moved. Okay. Don't get caught up in what's going on in markets. Look, we'll take a 2-second deviation. Oh my gosh, they're down 26. You do realize that we've been up a few hundred points, like, in the last couple of days. Oh my gosh, they're down 26. The NASDAQ is now, it's massively unchanged in the day. I didn't know it could go red. Mommy, hold me. By the way, that if it goes red, my account is definitely going green. There you go. So it's it's good. Oh, Meta. I think it moved. Okay. That's the sign, right? It moved. It moved back to where it was earlier today. Like again, don't get into the hype of this crap. Hey, Tesla got smacked a little bit. I like that. Okay. But back to Microsoft. Focus. Focus, people. Okay. There is only one Jerome Powell. And the most he can do, what is he going to do? Knock the market down 100 points today? I don't know. If the S&Ps are down 100 today, what do? Okay, you go, oh, we were overbought. If the S&Ps go down 100 today, yeah, we're overbought. Okay, next. So Microsoft, okay, what it really is, expected move is this averaging model. And what it means is there are billions of dollars being traded, but the average of the options being traded, okay, is 25, we'll call it 76. That's basically the average price of what's being traded. You can go, well, yeah, but I don't see how do you average $12 in this and how does that equal 25? Okay. What options are really doing, options are putting a price tag on forward risk. So if you traded any of these options, if you traded pretty much any of those options, what it means, okay, is you need that kind of a move to make it worthwhile. By the way, there's another way, like there's some people that are like, I'm trading on Fidelity, man, and they ain't got that number. Anybody here trading on Fidelity that don't have that number? Okay. Or like E-Trade. By the way, I've been in the industry long enough. I know somebody at every major brokerage firm. Okay. Those of us that ran Thinkorswim kind of spread out through the industry. So the people that originally ran Thinkorswim, one of them actually runs part of E-Trade. Her name is Mary Ryan. Okay. Obviously, Tasty Trade, some of the founders of Tasty Trade have left, but most of the people that run the organization are still there. One of my close friends actually went to Robinhood. He runs Robinhood. People go, no, this other guy runs Robinhood. No, that's the founder of Robinhood. The adult in the room is named Stephen Quirk. Steve Quirk actually ran Thinkorswim with us. Okay. So, somebody at every single brokerage firm, some of the brokerage firms have this tool and some of them don't. But if they don't have the tool, don't freak out. Add the at the money call to the at the money put. It equals 25 bucks. You're like, that's the dumbest thing ever. Works. Okay. When I used to walk onto a trading floor in 1998, okay, that sounds like a long time ago. But when I used to walk onto a trading floor in 1998 at the ripe old age of 22 years old, the first thing I would actually do was I'd look up, be like, okay, at the money straddle is X. My expected move, for instance, is 25. I traded in Yahoo at the time of like major earnings and crap, and like when they got added to the S&P 500 in like 99 and 2000 when crap was going crazy. And we used to always look at expected move because what expected move really does, it's handicapping, okay, forward risk. That's it, okay? This earnings period is poised to move $25 and change. Now, does it have to do that? Let's lay it down for you. Okay. Does it have to move 25 bucks? This is a standard deviation curve. Okay. Right now we're trading 537. Okay. It means we're supposed to move up 25 bucks or down 25 bucks. That's it. Okay. Like, don't overthink this crap. That's what the expected move means. And you go, we're supposed to stay inside of this range 68% of the time. Here's the most interesting thing about it, though. Okay. This is where the rubber meets the road. Like, if there's a time you want to pay attention, it's right freaking now. So, there's been tremendous research, as I've said to you, about earnings. Tremendous research about earnings. And in most earnings, okay, you stay inside the expected move. But with some really deep research, you actually find something very interesting. Okay. You don't stay just inside the range. Okay. That's staying inside the range. More often than not, what happens to markets is they gravitate. Okay. And what do they gravitate to? I'm actually going to change the color just so you can see this. They gravitate to the upper or lower edge of what we term expected move. They gravitate to the upper or lower edge of expected moves. That is not, okay, a statistical norm. It's actually, okay, slight abnormality. People, all we're going to do is we're going to take a shot either on the upper or on the lower edge of the expected move. That's it. We're just going to take a shot, and we're going to do it with a very, very small amount of risk. We're going to take this incredible, minuscule amount of risk. Why? Because if I go out there and I do a trade for 50 cents, that 50 cents can immediately be worth $2. Okay. Is it worth it to take a small amount of risk? Hell yeah. Because there's an incredible, okay, chance that we hit one of these upper or lower edges of expected move. In fact, how incredible the chance is, it's about a 1 in 3 probability. You have about a 1 in 3 chance of hitting an upper or lower edge of an expected move the day following earnings, period. Okay. People want to know like exact statistics in here, right? It's the only edge that you're going to get in earnings, period. I don't care what people say about earnings. Well, there's an earnings whisper site. Yeah, that's great. You want fries with that? Because that's all it's going to get you, right? There's a 1 in 3 shot of hitting the upper or lower edge of an expected move. Do we miss from time to time? Hell yeah, we miss. Okay. But you can miss 2 or 3 times. Hit one, boom, knock it out of the park. Like last week. Okay. Last week, I had a big misunderstanding. I completely missed like IBM until the damn thing turned completely around and hit the expected move. And I'm like, oh, that'll work. Okay. I mean, stocks can turn around massively from time to time. And I like it. So blank the screen over here. Now I'm going to actually show you the trade. If you're a little lost over here, good. Nobody fully interprets everything the first time through. Okay, they don't. So there were a lot of bulls, there were a lot of bears, but the marketplace, all of a sudden it felt bearish. Okay, relax. All we're going to do, I'm just going to throw a calculator up here. This first trade, I'm going to be bearish. I'm not going to be bearish in all my trades. The first trade, I'm going to be bearish. The consensus was pretty even in here. Okay, and it's good stuff. Okay, the consensus is fairly even, but there were actually more bears than I thought. So we're going to take the price of 537, okay, 76. Works, right? All right. Oh, it moved, Don, it moved. Relax, people. We're going to subtract $25.20 equals, okay, 512. So 512. Okay, 512.56. That's going to be our center strike. What do you mean 512.56? Well, remember a moment ago, all I'm doing right now is saying we're supposed to go up here or down here. Well, down here, okay, down here has a name. It's called $512.50. Like, holy crap, you know what's cool about this? It just happens to be an option there. It's 512.50. Okay, let's do it. Let's build a trade. Here's the part, okay? Here's the secret sauce to the whole thing. You want to see the secret sauce? You right click, come to buy. Okay, go to deep and wide. Okay, 1 month, 3 strike butterfly. Okay, ooh, look at this. How did I know to go this wide? That's the secret sauce, baby. Okay. I actually went to a 750 wide fly, 750 wide fly. Now, where's it pricing? Okay. Don't you dare start routing trades. Don't do anything stupid. Don't do anything stupid. Bid offer spreads are a little wide. There's volatility in there. I can taste it. I can smell it. I can feel it. Okay. Which means the price in here is going to be highly variable. Highly variable pricing. All right. I think I can get this one in this neighborhood, but I'm going to start routing trades and work my order. Work it. Let's cancel replace. Let's come over here at 62. I think I can fill it about 63 or 64 cents, to be honest with you. Okay. Somewhere in this neighborhood. By the way, you'll notice I'm cancel replacing like a madman over here. Okay. Because I ain't new. Okay? I just cancel replace back at 63. 63 it is. We're filled. Ready to duplicate order. Make sure everybody sees this one. Okay. And we're good to go. So that trade is filled. Now, before you do anything, just stop right there. Okay. I am posting the trades in the chat room. Okay. Do not place the trade just yet. You'll get filled for 63 cents. So everybody just calm the hell down. You can get filled for 63 cents. If you have to, pay 64 cents. What you allocate to this trade. Look, I'm going to place 3 or 4 trades. I'm going to do some bullish, some bearish. I'm going to mix it up a little bit. You're going to strike out possibly in 2 or 3 of these trades. I don't give a damn. You're meant to strike out. This is low probability, high reward trading. You know what low probability means? It means that has a low probability of hitting. You're paying 63 cents. And I don't give a damn what the mid price. Somebody goes, but the mid price, the bid offer spreads are wide. Why do you think I just filled for 63 cents when it said 67 cents right now? Okay. Because you got to know how to fill this crap. So I put you in at 63 cents. Now, That's if you do a one lot, it's 63 bucks. Okay. 63 bucks. What's the most you can lose? 63 bucks. Okay. When do you close the trade? When I say so. And when do you close the trade? Probably tomorrow morning. But if I completely miss it, I can close the trade even on Friday. But if the trade is like way out, like if the stock goes up when it should have gone down, it'll expire worthless. Oh, I lost $63. Okay. This is a low probability shot. What's the most the trade can make? Well, it could make 750. You won't make 750, but it could make 750, but you won't make 750. What's the most I've ever made on one of these? I've made $4. I've made $4 on a 750 wide fly. Okay. Not really recently. I've made pretty good. I've made like $3 though recently on a 750 wide fly. So I risk 63 cents. Realistically, I can make like $3 on this. You good with that? And if you miss, you miss. Screw it. Keep moving. Okay. Now, critical. How I allocate to this trade. If I risk 63 bucks here, I got to try to risk about the same amount of money in the next trade and risk about the same amount of money in the next trade. I'm going to try to make the trades easy today. I'm going to try to make the trades level in terms of like you could just do one. Okay. B captain one lot. B captain one lot. All right. Now, by the way, somebody's like, by the way, this is just a butterfly. It's just a butterfly. Okay. I'm taking a shot with a fly. Okay. I'm taking a shot with a fly. Remember, when does it work? Only on Wednesday or Thursday. Because flies don't get big until Thursday or Friday. So you can only place the trade on a Wednesday or Thursday night. So now we're back talking about the window. 40 days. Okay. 40 days. You only trade like every earnings season. If earnings season's a couple weeks long, okay, you're only going to trade on a Wednesday or Thursday of earnings season. And like your whole career could be earnings. I have friends that their whole career is earnings. This is it. Okay. You do all the analysis you want. How did I determine to be bullish or bearish? Okay. I asked a couple people in the chat room. That's why they call them flips. But this one, very, very straightforward. Tomorrow morning, okay, we'll wake up, we'll see where we're at. I don't even care about, okay, I don't care about where we are tonight because, you know, the CEO has to come out, he has to do a little dance, make a little love, say AI tonight, and maybe it goes higher and then it goes lower, okay. By the way, why did I bear up in Microsoft? I don't know. I mean, you can make every argument. All the good news is priced in. Okay. They own 27% of OpenAI, which, by the way, not only isn't a public company, it's not even a for profit company. I own 27% of a nonprofit company that could be worth, okay, billions one day. Their chunk is worth 135 billion. That's worth a $4 trillion market cap. Anyway, as I actually placed this trade, couldn't be more straightforward. Be captain one lot right now, because if you don't, and if you haven't traded this before, make sure you kind of understand before you start firing off a bunch of positions. Okay. So that is Microsoft. The Microsoft trade is bearish. It's on. I'm going to take my little Microsoft trade and I'm going to move it, okay, to earnings flips. All right. So now, okay, I've isolated my trade and I get to see it. Oh, there it is. It's a 1x2x1. Great. Okay. Shall we move on? All right. By the way, this is only done with puts. Okay. And I don't recommend anything. Okay. Are you recommending call or put? Either way, your numbers make no sense. Why would the numbers make no sense? All I did is took the $25, subtracted it from the underlying price. Microsoft is going to be up 25 bucks or down 25 bucks. I think that's pretty easy. Okay. And if you don't understand it, paper trade it. Paper trade it the first time through. Okay. I like it. This is for educational purposes only, except behind the scenes, I'm going to trade a crap load of them. You like that one? I always trade the earnings. By the way, nothing, okay, is more engaging to me than doing this strategy around earnings. Nothing. Like I'll scalp, I'll trade, I get crazy with it. Nothing to me is more exciting though than trading around earnings because when the earnings come out, you're like, winner, winner, chicken dinner. And then the next morning, the stock moves down. You're like, oh, I've learned, okay, it ain't over, okay, till it's Friday afternoon. It ain't over till Friday afternoon. I have till Friday afternoon for this sucker to hit 512.50. And if it does, there's a 1 in 3 chance of that happening. And if it does, you're golden, pony boy. All right, you guys want to move on? Okay, now we're having fun. All right, there's no slippage getting out of butterflies. Man, this marketplace, this is freaking Microsoft. Okay, what do you think I'm talking about liquidity? Like if you're worried about butterflies and slippage, you're trading the wrong crap. Okay, Go over and sit in the Chipotle section because CMG, let's actually go look at CMG. CMG got me. Look at this. Order flow sucks in here. You could do it in CMG, but I wouldn't do it because here the bid offer spreads are a little wide, and they're going to get wider with time. So CMG is out. Want to do another one? Want to do another one? Starbucks? Starbucks. Let's do Starbucks. Okay. I wasn't sure I was going to do Starbucks until about 2 seconds ago, till somebody actually mentioned liquidity in here. Okay. I could go to Meta and I'm going to go to Meta. I could go to Google and I'm going to go to Google. I decided to use Starbucks. It's an $84 underlying. Okay. Does it have decent liquidity in it? And the answer is yeah. I mean, look, it ain't Microsoft, but I want to make a quick point. It's not Microsoft, but okay, it's completely and totally doable. Like there's contract size in here. When you're trading thousands, okay, everywhere and every single strike, you're good. You're good. So what do you want to be? Bullish or bearish? Okay, in Starbucks. Anybody? Bullish or bearish? Okay. Give me a bull, give me a bear, give me something. Okay. What do you want? What do you want in here? Bullish or bearish? Show me Starbucks. Bullish or bearish in Starbucks. All right, we're getting crazy now. Okay, it's fairly even again. There's a couple of bears coming out. There's a couple of bears. The other room though is all bulls. Wow. Okay, I'll tell you what. So there's a reason I actually brought up Chipotle. You know who runs Starbucks, don't you? Okay, it's Guacamole Brian. Okay, it's Guacamole. Is Brian Nickel? Okay, Nickel. Yeah, Brian Nichols. Okay, Guacamole Brian. That's what I call him. I can't wait till one day I get like a cease and desist letter from like Starbucks CEO. Don't call me Guacamole Brian. For those of you that have no idea who the hell I'm talking about, I'm talking about the CEO of Starbucks, who okay saved Taco Bell guacamole and then saved Chipotle more guacamole, then turns to Starbucks. No guacamole. Okay. This guy is all avocadoed out. Now, what does he have to deal with? A lot more crap. But there's like a restructuring plan that's been going on and yada, yada, yada. By the way, I don't really give a damn, right? uh, I saw some bulls in here. So, yeah, you know what? I'm going with Craig C0905 said bullish. So, Craig, it's all yours. By the way, Craig, if this doesn't work, Craig, it's on you, big guy. It's on you. I don't even have to use a calculator for this one. This one says $84 and change. This one says $6 and change. If you take the $84 and change and you add $6 to it, what does it come out to? Okay. Would you like me to use a calculator? Sure. What the hell? So you take the $84, okay, and 20 cents and you add, okay, $6, okay, and 36 cents equals 90.56. Okay, 90.56. What you want me to do? Okay, I'll use the 90. I'll round up. I'll go to 91. I'll get crazy, but it'll go to 91. Um, the question, of course, everybody's going to have is how big you're going to do. I'm going to go buy deep and wide. Okay, 1 month, 4 strike butterfly, $4 wide fly, 54 cents. Let me think about the pricing in here really quick. That's not bad. This should, I'm not going to fill there. I should be able to fill right around 54 or 55 cents. There you go, filled. Okay. Create duplicate order, copy. He shoots, he scores. Okay, I'm going to post these in the chat room now too. Now it's a party. Now it's a party. And remember something, okay? Remember something. You're going to have to be able to get out of here. Eventually, you're going to have to be able to get out of here. By the way, the strike prices, okay? The strike prices definitely vary. $5 wide, $10 wide. Okay, this one though, because it had dollar strikes, I was able to peg this little monkey. Okay, I pegged that one. You go, how come you didn't go any wider than that? Because I don't want to. I choose not to run. So if you look at the wider fly is 84 cents. Screw that. Okay. By the way, see, I told you guys, stop worrying about the Fed. Don't worry. Market's basically unchanged. So what's Jerome Powell worth? Absolutely nothing. Financials are getting whacked. So now, okay, I've got one bearish, okay, one bullish. Let's go over here to Starbucks. Let's actually drop this into my secret super earnings flips. Okay. Now I've got to trade on Starbucks too. Are we having fun yet? Okay. Let's do it again. Let's do it again. This time we're going to go in slow motion. Google. Let's go to Google. Okay. What are we doing in Google? Are we bullish or are we bearish in Google? Let's just start right there. Let's get a little crazy with it. Are we bullish or bearish in Google? Okay. Come on. It's Google. War. What is it good for? That was a great episode of Seinfeld too. Are we bullish or bearish in Google? Okay. Oh man, there's like a consensus in this one. Okay. The bulls are out. All right. The bulls are out. So now that I said it, everybody's like, no, I'm a bear. I'm a bear. Okay. Where are we at? $18 expected move. Ruh-roh, raggy. Look, I don't even have to get a calculator for this one. That plus that equals basically like 290, right? Here, let's do it. Okay. So you have Google's actually running here. 273 plus 18 equals 291. And there's no 291 strike, so I'm going to round it to 290. Okay. Let's go down to buy, deep and wide, 1 month, 3 strike butterfly. Oh, look at this one. There's no difference between this, the Google fly, and the Microsoft fly are the exact same thing. And you go, what the hell are you talking about? Like, look, the Microsoft butterfly was trading for 63 cents and it's 750 wide and a $500 product. The Google fly, okay, is 750 wide and it's trading for around the exact same price. You want to know what that means? Okay. It means they have the same probability inherently of hitting. It's pricing and options is absolutely perfect. Perfect. Don't let anybody, oh, this is mispriced. Mispriced, okay? Are you out of your mind? Okay. Wow, Google filled 64 cents. Now check that out. I filled Google for 64 cents. I filled Microsoft for 63 cents. They're both 750 wide flies. They gave you identical odds on that one. Perfect. Absolutely freaking perfect of a marketplace. Okay. And you're looking at this right now and you're like, man, you kind of, okay. Somebody's like, I don't even know what a butterfly is. Sarah, it's okay. Okay. You don't have to trade a butterfly. It's okay. This is, we're a little hopped up on caffeine and up tempo today. And it's okay if you're not comfortable with what the trade is just yet. Obviously, okay, that is easy to teach you. It's understanding, okay, that we're playing this game of pin the tail on the donkey. Okay, that's all we're really doing is a game of pin the tail on the donkey. And what pin the tail on the donkey amounts to is Google. Google in this most recent earnings, okay, is poised to move $18. I'm not saying that, the market is. Okay. Don't listen to me, listen to the market. It says, look, I'm not going to sit here and argue about $18 of expected move because it's futility. Okay. Through and through, the most studied thing in this whole business is that expected move, period. Okay. So the expected move is $18. There's a really high probability we go up 18 or down 18. But what happens if Google has a smash earnings and we go up $50? Crap happens, and that can happen. You go, oh no, I went up $50. Great, you can lose 64 cents in there, which is $64 if you do one unit. That's it. That's what you need to be able to garner from this. And and okay, if Google sits right at 290, if it sits right at 290 for any period of time, okay, that's 64 cents tomorrow. It's going to be worth like $2. Okay. And if it sits there a little bit longer, it's going to be worth $3. Ooh, that feels good. Turning 60 cents into $3 doesn't suck. And all I'm doing is playing pin the tail on the donkey. I'm throwing darts right now. I'm throwing darts, but highly, highly, okay, accurate and skilled in doing so. So when it looks like, the first time you see somebody trade like this, you're like, chaos, man. Okay. That chaos is a means to the end. And then I say means to the end. This is how you like, look, I could strike out on 2 or 3 of these trades. And even if I do strike out on 2 or 3 of them, 1 out of the 4 can hit. I'm going to go in and trade meta. 1 out of these 4 trades can hit. What if I went out? Okay. What if I went out and I risked I'm going to make this nice and easy. If I risked $60 and then I risked $60 and then I risked $60 and in the third one, I made $3. Okay. took care of that loss, that loss, that loss. We come out even. Like, no, we come out way ahead. Are you out of your mind? I've had nights where I strike out, I said striked out. I struck out literally on all four. I've had nights where I've struck out on four trades. And then the next night, okay, I hit two. And those two I hit, okay, were for like $3 each. And it's huge. Okay. I just had one of those last week where I was like, oh, I stuck. Okay. And all of a sudden, okay, trades came ripping back around. Markets are crazy. It's good. That's the issue. I want you guys to understand you're going to strike out on trades. You're going to, oh, I lost 60 bucks and I lost 60 bucks and I lost 60 bucks. Okay. You're like, Don, that starts to add up. Yeah. It's 6 times 3. Okay. So I lost $180. But in another trade, I made 3 or 4. Takes care of that. In the end, it's about what? Number of occurrences. Okay. Say it to yourself 1,000 times. It's about number of occurrences. Okay. Let's trade. All right. Back to meta. Back to meta. By the way, between you and I got problems with meta. Are we bullish or bearish in here? We bullish or bearish? Okay. I got a lot of problems with you people. I'll tell you what, on this one, okay, you guys decide. I am completely up in the air over here. Completely up in the air. What do you want to be, bullish or bearish on meta? Hands, I'm folded, okay, not doing anything. Okay. And I'm telling you right now, I have not, okay, I have not like prefabbed this trade at all because meta moved a lot since before I started. Okay. I have a pretty good idea. Oh man, there's a lot of bulls in here again. Okay. You know what? I like that. You know what? A baseball average hitting 300, okay, in baseball, okay? You know, you're making 30 million a year. That's not a joke either. Okay? You hit 300 in baseball, you know, you're making 20, 30 million a year. That one I do here. By the way, I don't really watch baseball. I know it's horrible to say that because the World Series is going on, but I lived across the street from a pitcher for 10 years. Previous place I lived across the street from a pitcher, and he played on Kansas City. He played everywhere. Played for the Indians. Played for the Mets at one point. All we'd ever talk about is statistics in baseball, and I was absolutely obsessed with like the finance behind it. All right, so there's a lot of bull going on over here. Okay. Oh man, you're making me bullish. As Dale just said in the chat room, Don will choke if you make it bullish. I'm gonna do it, Dale. Okay, for you, I'm going to do a bullish trade in here. Like, seriously, I have problems. I hate meta. Okay, I don't mind saying that. So I'm going to say 746 plus 51, okay, equals 797. Well, there's no 797 strike. So I guess we're going to, are we doing it? We're going to 800. We're going right to the 800 strike. Screw it. Okay, 797. But you're like, okay, I'm rounding to a big round number. I like big round numbers. Okay, I do. I like big round numbers. Anyway, this one's going to be a little bit different too. Because, I mean, you're talking about an $800 behemoth, right? So deep and wide, 1 month. I think it's a 2 strike. This one should work as a $10 wide fly. Holy crap, that seems way too cheap. Let me actually price the other fly. Okay, so Don is not now. $1 is too much. I'm not paying $1 for this crap. Okay, I'm not even paying 93 cents for it. I'll do a $10 wide. This one looks like a real flyer. Like this is out there. Okay, this is out there. You're paying 40 cents for a $10 wide fly. They're giving you a very small chance of hitting. In fact, okay, I might be able to even buy this for less. So I'm going to play around with it for a second and see if I can get this thing filled. I think I'm probably going to pay 40 to 41 cents. Okay. No fill, no fill. Okay. By the way, the greatest thing about trading is you're a penny away from getting a fill in either direction. And I refuse to give up a penny. There you go, 51 cents. It's kind of what I thought. So I'm paying 41 cents, okay, for the right to be bullish in meta. But that was really anticlimactic for me to actually say, bullish in meta. It hurt. It hurt me deeply to be able to do that. So, all right, you got your bullish trade inside of meta. Look what your people made me do. Look what you made me do. I have a child that says that all the time. Look what you made me do. I'm like, I didn't make you do anything. I'm like, you screwed that up all on your own. So what do we have tonight? Okay. We got Google, we got Meta, we got Microsoft. Okay. So you got basically Google, bullish. Okay. Meta, bullish. Ugh. Microsoft, bearish. Starbucks, okay, bullish. Ah, better be a bullish kind of day. Better be a bullish kind of day. There they are in all of their glory. Markets massively unchanged after the Fed. Volatility up very, very minimally. Look, as obscure as this may seem, okay, you only have to do this a couple of times each earnings season, and you'll start to hit. And there is a little bit, you have to kind of catch your stride in here. Like you gotta, yes, you have to understand the trade. And I know that, someone by the name of Sarah came in. She's like, I don't even know what a butterfly is. Okay. This beats the hell out of just buying a call or buying a put. That's spray and pray. What we're doing over here, okay, is highly skilled. We are playing again, pin the tail on the donkey, and we have a pretty damn good idea, okay, of where that donkey is going to be. So we do some bullish and some bearish. You go, how come you don't do bullish and bearish? It is not worth it. Mathematically, screws up the whole trade. People always ask me that. Do a bullish and bearish one on Meta. Do a bullish or bearish one on Google. It is not worth doing both the bullish and bearish. Okay. Statistically speaking, you are much better off. Pick a direction, stick with it, screw it. If I miss a couple of these trades, okay, it's okay. Because you know what? Coming back around, I'm going to trade tomorrow night too. Tomorrow's Thursday. Thursday, there's more earnings coming out. Okay. And I'm going to do the exact same thing again with 3 or 4 trades tomorrow. Okay. And you know what I have to do? I got to hit like 1 and 3. 1 and 3 isn't break even. 1 and 3, okay, is high degrees profitability. 1 and 3 is high degrees of profitability in this strategy. Look, this is the 40-day year. It's in real life. Most of the years, just, take it as noise. These 40 days, okay, is signal. Signal is everything. Okay. They show up on a schedule. One of the coolest things, I didn't even show you the calendar in here. It's an amazing invention. It's called a calendar. And with that calendar, you can plan all the earnings and you don't have to look at everything. Okay. You can actually sort and just say, I just want to find the biggest and baddest stocks to be able to trade. We do all of that. Okay. That's what we do here. I mean, that's it. Okay. They show up on a schedule. We'll step in. We're only going to trade on Wednesday and Thursday. You don't do this on a Monday. You can't do this on a Tuesday. You can only do it on a Wednesday or Thursday because your little butterfly, okay, only grows on a Thursday or a Friday. They only grow on a Thursday or Friday. That's why you place it Wednesday night for a Thursday close. You place it Wednesday night for a Thursday or Friday close. You place it Thursday night for a Friday close. Look, okay, why it clicks every quarter. It's earnings season. It's math. Okay. It's not gut feeling. It's not lagging indicators. Did you see me look at that MACD? Did you see me look at the Fibonacci? Did the Fibonacci people make you do this? It's simple rules. Okay. There's such a clear entry and exit for it. Really, really short hold times. There's like less screen time. In actual trades, once you understand this, bam, bam, bam. Okay. You're good. You're good to go. Look, this is Schwab. Now, let me get recent. Is this recent enough for you? Okay. We just entered into earnings season. Okay. So I don't have a ton of examples, but I have some examples for you. Why? Okay. Because I've been hitting crap. Schwab sucked. This trade sucked. I've hit Schwab a couple of times. This one sucked. I paid 64 bucks. Okay. I got back $135, 111% return. That, okay, that is a marginal trade. I was not happy with it. Okay. Not even a little bit. United Airlines. Here's one where I royally sucked. Okay. And I still got 107% out of it. This, okay, was fluff. IBM. This one was a complete loss. Came back around 90% return. By the way, as painful as a 90%, that's the worst return I've had on any of these trades, okay, in a significant period of time. And you want, by the way, look at the dates on here, okay? So you can see what I did on 10/15 closed on the 16th, 10/15 closed on the 16th. Pretty marginal. But that night I hit 2. You hit 2 in a night and they're 100%, 111%, 107%. I don't give a damn what else you did that night. You're a winner, okay? Then the next week I did IBM, okay? I sucked on IBM. The market moved the complete wrong way. And then it rallied and I was like, Oh, did anybody see IBM? Okay, it was so down. It was so down right up to the point I made 90%. And then T-Moose. Oh, you only need one T-Moose. Look, this trade was actually put on, okay, last Wednesday, and it was actually closed, okay? It was closed on Friday. This trade was put on last Wednesday. I missed it on Thursday, meaning that it wasn't anywhere near it. T-Moose, this is T-Mobile, came back around 315% return. He shoots, he scores! Because last week, I only did 3 trades, okay? I only did IBM, T-Moose. There was a third one. I can't remember what the third one was. It doesn't matter. Okay. You know why it doesn't matter? You know what? I can go back and I can look at that crap too. I'll show you every damn trade I do because a 315% return, that crap doesn't lie. You could miss a bunch of trades. As long as you make a 315% return, okay, you're huge. Look, this is what you just saw. Fast flips, define risk, repeatable steps, quarter after quarter. I've been doing this crap for years now. Years. Here on TheoTrade. Okay. Lock it in. Okay. You've seen the window and the workflow. Now get the alerts and the structure that make it repeatable. Okay. Trade 40 days a year. Take off the other 212. I don't care. Okay. And I love that. I actually love saying that because there are some people, they don't want to sit here, okay, in front of screens. They do want that instant coffee instancy. They want that instant gratification. And this crap, this gives it to you. Trade the 40 days a year, okay, skip everything else, trade some earnings flips, get into it. Introducing earnings flips alerts. It's $995 a year, okay? What do we do? Now, Sarah had said a moment ago, I don't even know what a butterfly is. Great. There's actually an earnings flip masterclass. There's all the precursors to it too. If you don't even know what a call or a put is, okay, I will give you everything you need to know to make you viable in trading this. And I mean that. Every nuance, okay, is covered to get you from A to B to C, all the way to be able to trade these flips, okay, in just unparalleled and detailed under like education. So the earnings flips masterclass. Now this one's recorded, it's in the tank, it's on demand, it's ready to go. That means you can enroll right now. You're watching the class. Okay. The class is going to go into a lot more depth about scrutinizing the entry and exit criteria, scrutinizing why I use the 750 wide fly. Okay. I say to this, you can follow my trades, but don't just try, okay, to randomly like pick strikes. You will always make more following our trades. You're always going to make more until you're like really got a year under your belt. Follow what we do. That's why we don't just do a master class. Okay. What people come here for, what they're paying for, okay, are the alerts. The alerts, okay, what you just received right now, those 4 trades, those alerts went out to everybody that are already flippers. Okay. The earnings flippers just received the same alerts. I apologize, earning flippers. I gave 4 trades out today. Okay. The first few are free. Then you got to pay. And that's okay. I do a minimum of 15 trades per earnings season, but let's be very forthright. I do a hell of a lot more than 15 trades in earnings season. You can pick and choose, but I do a minimum of 15 trades. I get a little selective, and especially when volatility picks up, I get real selective. Okay. There's a huge value associated with this because over the last 12 months, again, it's about, every $1,000 turned into what, 1,800 and change. There is a quarterly pre-earnings huddle. Now, this one we're actually holding November 7th. You want to know when that is? It's next Friday. We're actually holding this one towards the latter portion of the earnings season because tailing off in earnings, we're actually going to go back, okay, and do a little analysis in some of the trades. Every one of you, okay, get in now. You're in for the huddle. You're in for the huddle. So you are going to get tonight's trades. You're going to get the exits tomorrow. As you enroll for this, you're going to get tonight's trades. Okay. You're going to get the exits tomorrow. Okay. Then you're going to get Thursday's trades. If you're not comfortable yet, don't worry, don't trade. Okay. You know what's cool about this? You're paying $9.95 for the year. You're going to basically have an entire another year. Okay. You're going to have a full year of earnings trades. So don't panic. You don't have to like rush into these trades. Okay. So the quarterly earnings huddle is coming up November 7th. Okay. Write it down. Get ready. Get crazy. It's coming up. Okay. When is it? It's next Friday, 8 a.m. Pacific time. Okay. I like to do my trading early. Earnings flips watch list. It's exactly what it sounds like. It's watch list. It's what's in play. There's like 80 stocks that we're highly likely to trade, and it changes quarter to quarter. So it's $297 value. What's in there. Okay, how to place your first trade. And literally, we have a video set up like how to place your first trade. It's theotrade.com/40. There is one thing I want to bring up in here. Okay, and it's important that I do actually show this to you. So, all right, as you guys go to this page, theotrade again, .com/40. Okay, join me there for 1 second on theotrade.com/40. Put an option in here. Okay, you can do a year for $9.95, just like I said a moment ago. Okay, but you could do 3 years for $19.95. All right, obviously saving you a significant amount, saving you $1,000 in here. And we're doing that obviously to incentivize you to enroll for 3 years. Is this going to be around for 3 years? Of course. We've been doing this for years now. Like earnings flips of all the strategies here at TheoTrade, this is the most tried and true. Okay, we've had people trading with us for years. Okay, but it's critical. It's critical. Watch the master class. Know what you're doing when you come in here. Okay, don't just come in here willy-nilly and start trading with us. Watch the damn class. It's important. Okay, whether you do a year, whether you do 3 years, that's completely up to you. Speaking of which, okay, put in the correct information. We need an email address. We need a phone number that are viable because these trades come out via push notification. We do text messaging and we email you. Is that enough communication? Okay, we're sending up like whirly birds. You're going to know though, when you're in flips, okay, and I call it flips, but when you're in flips, you will know, okay, on a Wednesday afternoon or a Thursday, basically you don't have to sit in front of your computer then, but be ready because that's when they're coming out. And it's always in the last hour and a half of a trading session. It's always in the last hour and a half of a trading session. These trades are coming out. With that, as always, 30-day money back guarantee. Okay, trade with us. There's no stipulations to it. There's no stipulations in this one. No excuses, no questions, no commentary needed. If you don't like it, okay, get out. Like by the way, I'm gonna make a point though here. If you sign up tonight and all 4 trades miss, don't get pissed. We'll come back on and hit it tomorrow. Like people get crazy with that stuff too. They're like, he struck out 7 trades in a row. You know what? I've seen people, okay, Major League Baseball, get up to bat. It's the World Series, strike out 7 times in a row. You're like, you got to get him out of there. Okay. Yeah. And then he hits a grand slam home run. Okay. So shut your mouth and let us trade. I cannot stress that enough. The 30-day money back guarantee, you got to sit there and you got to trade. Put some capital into it. Okay. Or just watch the first quarter. But understand one thing. You have no idea what the probabilities are going to be until you've been through 15, 20 trades. Okay. Just sit there, take the damn trades. Because what people do is they literally second guess. They go, he sucked last night. He's going to suck again tonight. Okay. So if I miss 3 trades and then the next night you're like, I'm not doing those. I guarantee you those are the 3 trades they're going to hit. People constantly complain about that crap too. And I'm like, look, either do all the trades or do none of the trades. You're in or you're out. Okay. There's a 30-day money back guarantee, but I'm telling you, put it through the test because this one is tried and true. Earnings Flips On Demand Masterclass. The class, okay, has detailed criteria. Like it gives you every nuance about that expected move, every nuance of the entry and the exit, every nuance of how I get a fill, meaning that execution. Somebody said, sometimes it's hard to get out. No, it's not. I'm going to give you the exact prices you can get out. Okay. All of it. So it's simple. Okay. Unique strategy. You can execute this over and over again for the rest of your life, every single earnings season. Okay. So everybody calm down with that one. Now, the alerts. I'm supposed to do 15 high conviction, okay, alerts per earnings season. We do way more than that. The minimum, though, is 15. The reason I say that is because if there's extreme volatility in the marketplace, okay, I'm actually going to pull it back a little bit. If markets are totally dull, then it works unbelievably, okay? Like then I'm just going to pile on, pile on, and pile on. Right now, we're actually kind of dull. We're pretty dull in the marketplace. So I'm actually trading a little bit more this particular earnings season. So it's a $4,800 retail value. Okay. This is where the money's actually made. Put your money where your mouth is, and I am. I'm trading with you. Every single trade, okay, that you've seen, okay, gets placed live. And I trade these things, okay, heavily, heavily. And I've got great track record off of this. It's one of the most heavily tracked aspects of what we do here at TheoTrade. That's the earnings flips alerts themselves. And those alerts that come out again, text message, that come out in email, that come out in push notification. We literally are sending up flares in the sky when the damn trades come out, but you know that they're coming out on a Wednesday or a Thursday. Okay. Earnings flips pre-earnings huddle. This one's coming up November 7th. Okay. It's basically talking about where we're actually headed. Okay. With flips, it's not so much about bullish or bearish. And this particular earnings flips huddle, I'm actually doing it towards the end of the earnings season. And the reason I'm doing that is to kind of recap, okay, what's worked and what's not. We have some people that are actually doing some of the trades now themselves, meaning that instead of just doing 3 or 4, okay, they're actually building trades themselves. And I'm actually kind of hosting this one on Friday, November 7th. I will be in there with Blake Young. Blake Young is actually going to help me in there. So earnings flips, okay, pre-earnings huddle. It's Friday, November 7th, 8 a.m. Pacific time. Write it down. We will send you a number of reminders. Okay. All right. That's I'm dying over here. Okay. By the way, I like what somebody said. Don't overpay for these flies. Okay. Don't ever overpay for them. All right. Mm. This is the watch list. There's probably 80 products in the watch list at any given point in time. The watch list is 80 products that we feel are viable for flip candidates. Doesn't mean I'm going to trade all 80, and I'm not going to trade all 80, but those 80, okay, are viability. And then basically we filter down from those 80, we filter down to probably 20 or 30 that will actually trade. And I said at minimum 15 trades go out. So last but not least, how to place your first trade. I walk you through every detail of execution, okay? Soup to nuts like today, but today slowed down dramatically, okay? So it's how to place your first trade if you've never done a butterfly before, what to expect, okay? Again, earnings flips alerts, $9.95 a year. theotrade.com/40. Can't stress enough, okay? Watch the class, please. There's one critical area of the class, and it has to do with allocation. Got to try to allocate the same amount to every single trade. It's essential for this. Okay. theotrade.com/40. Again, to reiterate, there is a 30-day money back guarantee. Extra bonus in here. If you need us, email us, support@theotrade.com. If you're in this flips alerts, you can email us as many times as you want. It's fine. Okay. We are here to help you. All right. There are 50 available spots in the 30-day money back guarantee. And we absolutely, unequivocally, we do that intentionally. Okay. Why? Okay. To incentivize you, obviously, to enroll for this today. Now, again, it's $9.95 for the year, but I want to once again kind of reiterate $9.95 for the year. You can also select 3 years. Okay. Save $1,000 and you're in there for $2,000 for 3 years of these alerts. Okay, which is a spectacular deal on that front. If you need us, call us 623-244-5657. Okay, I always say this, like, look, there are certain people that just do not want to put stuff in online. You have questions in here. Okay, our support team is standing by right here, right now. So 2 things in here I want you to keep in mind. Number 1, the trade is always about number of occurrences. That's number 1. You're not necessarily, you're going to have 3 trades that just go bad. And you're going to be like, I'm so frustrated. I lost on 3 trades. I actually had somebody, and I'm not joking. I had somebody to come in here and he risked $70,000. Okay. $70,000. Okay. On like 5 trades. And one of the trades made money. The other 4 struck out and he was upset. Okay. And I'm like, you should be upset. Like, what the hell, man? What are you risking $70,000 for? Okay. And a handful of trades over there. And I said, maybe you should pare that back a little bit, to like, well, maybe not $70,000, maybe only $1,000 a trade, $8,000 a trade. It's insane. It's a huge amount of risk to be able to take on these. Okay. But you got to like recognize if you had $1 million account, you could easily do $1,000 a trade and come out absolutely huge. But you got to be able to trade 10, 15 of these because it's a numbers game. You're going out there and you are literally throwing darts. Okay. And you will hit bullseyes. You're going to understand that sometimes you could have 4 or 5 losing trades and then the next 4 or 5 are winners. That's how the game works. Okay. And it's just that this is an edge. This is a trading edge. An edge is never about, seeing profitability every single day. Edge is going to be about, going out there, doing the same thing And this is a low probability, high payout strategy. And as you saw a moment ago on T-Moose, okay, that thing was way off, and all of a sudden 315% return. That's what you're here for. Okay. And that's, again, you just call us. Some people don't like to put credit card numbers in online. 623-244-5657. Again, it's theotrade.com/40. Look, every trader needs an earnings edge. Earnings, okay, it's the bedrock of trading arsenal. It really is. Okay, repeatable opportunities, rinse, repeat, trade earnings for a lifetime. Definitive system for trading earnings. There's two doors. Okay, pick one. You can go through A or you can go through B. A, keep doing what you're doing. It's okay. Chase another random, Tuesday. Stare at charts you don't trust. Okay, the Fibonacci people made me say that. Okay, I'll figure it out next quarter. You know, lose another earnings series, season to noise, which is earnings season is noise. It's just complete and total noise. It gives CNBC something to talk about, for a couple of weeks. It's noise. It's garbage. You want to really know what's going to happen? Microsoft's going to move, up or down its expected move. That's it. Starbucks, okay, guacamole, Brian's not going to influence that expected move. Forget about the noise. Door B, okay, trade the window with me. You have 4 10-day earnings windows, okay? 40 focus days a year, okay? Rules on paper, risk, okay? Define, capped at entry, alerts to tell you what and when. Stop, okay? Just stop after that. Just live a little bit and relax a little, okay? I can walk you through door A. I will, okay? Or say I can't walk you through door A. I'll walk you through door B. The only thing I will do around earnings is what we do through door B, and that is very, okay, finite trades in here. All right, join earnings flips today. Get the masterclass. Join the pre-earnings huddle. Okay, follow the next alerts into the window. All right, the line in the sand. Okay, door A is a grind. Door B, more control. Think you're going to be calm, relaxed, more life. And I'll tell you right now, you will love trading these earnings flips with us. Okay, take back your time. Okay, take your attention back. Okay, take your trading back. I mean, that's really what it is. It's much more control doing this. Okay. Let's trade the days that actually matter together. Ready when you guys are. And again, the next flip window is shaping up to be huge. Pick your door during earnings flips today. Okay, trade the 40 days that matter the most. Skip the 212 that don't. Okay, earnings flips again. theotrade.com/40. A little bit of Q&A here, and I'm going to kind of wrap things up. Okay, how will we know if you win or loss? Okay, you're going to look at your P&L tomorrow, and I'm going to be exiting these things like crazy. I mean, look, if it's in the center of the fly, it's a huge winner. Okay, all right. Look, I'm just going to go through these briefly. Okay, what do you really need to kind of get started over here? What do you need to get started in here? Laptop, internet connection. Quite frankly, I'm looking for my phone. Okay, you can actually trade these over your mobile device. Okay. You could trade these directly over your mobile device. That's fine. And I don't want anybody to think again you have to be glued to the computer. Sometimes it's a butterfly. Um, if you don't know your mobile trading application, it's a little weird the first time, but if you know how to place a butterfly on mobile, 2 seconds. You just follow my trade. You never even have to sit in front of the computer. Literally, you do not have to sit in front of a computer. So I don't want to think that, everybody's all hopped up and like, oh no, I got to sit in front of the computer. I got to do this. I got to do that. Use your damn mobile device. You can trade butterflies in mobile. I do it all the time, especially on exiting these trades. Okay. By the way, as people are enrolling right now for flips, I'm just going to read off your names just to confirm we see you. Okay. Uh, and by the way, I also could tell you it takes me 5 to 7 minutes before I see your enrollment, so I'm always behind a little bit. Um, Jamil M from California, Jeff T from Illinois, Brian C from Florida, Doug F from Utah, Shay E from Canada, Jessica K from Arizona. Jessica, are you in Flagstaff? Nobody lives in Flagstaff, okay? Unless, of course, you're a college professor or a student, okay? It's getting cold up here. It's very, very cold. That's just the first batch of names that I'm seeing coming through. And we're going to strictly stick to 50 riskless spots. And again, we do that to incentivize people, of course, to enroll today. Now, you don't need to bring anything else. Have an internet connection, have a mobile device. We'll do everything else. If you need a piece of education that you think you're missing, okay, email us. We'll give you access to it. It is what it is. We want people, okay, to be on the same level playing field when they're doing these trades, to be able to follow our trades, okay, efficiently, right? So, oh, somebody said, what's the ideal account size for trading this? So the most ideal thing is they're going to do away with the day trading margin restriction altogether. So that's not even going to be a question. So the day trading margin restriction is going to be removed. Okay. You can literally do this in a $2,000 account. And I even set one up, ironically, I totally forgot I was going to trade this a little bit today, but it's a $2,000 account. I can trade this literally in a $2,000 account. And you can see in this $2,000 account, I haven't done that much this year. I'm up $180. Then we have a $377,000 account, or up 128. Then a $80,000. This is my IRA. I'm up about 18 grand year to date in the $80,000 IRA. By the way, I don't care. I'll show everybody P&Ls on every single account. Haven't really traded the $2,000 account though a ton, but you can do it in a $2,000 account, and you can absolutely do this. You can absolutely do this inside of an IRA. So the account size is nominal at this point. I hope that kind of answers your question in there. I don't want anybody to feel like they have to have this massive account to efficiently be able to trade this. Okay. This is annual access to the flips alerts, or 3 years access to it. People always ask that question. I'm not doing anything quarterly, monthly anymore. Okay. Annual access. It's good. Okay. And if you like it, like what happens after the next year, do it again. After 3 years, if you want, okay, do it again. I mean, earnings flips is going to be around. There's no question. Like, earnings flips is going to be around. All right. Onward. You can email us anytime, receive a response within 24 hours, including trade related questions. Just hit me at support@theotrade.com. I do answer a lot of my own emails. Okay. Along with me answering emails is none other than Todd Sweet. Okay. Todd Sweet actually helps me answer a lot of emails over there. Variations. All these trades can be done in a retirement account with as little as $2,000. Okay. We can get you help. We can get you help to get approved for options at any major broker dealer. So relax a little bit. Okay. We'll get you a broker dealer that you can be able to trade this. Sometimes people say, like, I have a Fidelity account and I can't do this, or I have this account and I can't do this. Relax. Okay. We are here to help. So we'll help you get approved. We'll give you the right broker to go to wherever you are. Like if you're in Canada, okay, in Canada, you use this broker. Down here in the US, you have a few more options, and that's okay. Okay. All right. So there's 50 riskless spots. When I'm talking about the 50 riskless spots, okay, that's in reference. Okay, that's in reference unto right here, the 30-day money back guarantee. There are literally 50 spots on the 30-day money back guarantee. So get results, take action, okay, enroll now. Like, you guys are going to love what we're doing at Flips. Of all the strategies that we do here, of all the strategies that I teach, okay, if you guys haven't noticed, pretty passionate about this one. I love it because there's nothing like executing, and watching the results. Like, literally after the bell today, if you have trades on, you're gonna be like, oh, because all four are coming out. Okay, all four are coming out with earnings. Gets a little crazy. By the way, always remember this: if you do an earnings announcement Wednesday night, it comes out Wednesday night. You have Thursday and Friday to hit the fly. So don't think that you missed a damn thing, because they come back around. Last week was a perfect example. I missed everything on T-Mobile till it was right on for a 315% return. With that, it's theotrade.com/40. I got to get out of here. I'm actually going to turn over this session in just a moment. Thanks everybody for tuning in today. If you've got questions, we're in the chat room right here, right now. If you need support, they are there. 623-244-5657. All right, I'll get out of here. Make way for Garrett. And for those of you that are in here right now in the opposing room over here, if you have more questions, Todd, myself are in there to answer those questions for you. Thanks everybody. Have a good afternoon.